And we are live. Ladies and gentlemen, welcome to the Dylan Holy Experience midweek market recap. To be more specific, it is 6 p.m. Pacific Standard Time in California, 9 p.m. Eastern Standard Time for those of you on the East Coast. Thank you so much for tuning in. We are back after a wee bit of a break, but we're back rejuvenated and more excited than ever to deliver the millions what they need to see and hear, for that matter. Let's see what's going on. Stock futures are flat on Wednesday evening. They were little changed in overnight trading following a losing session on Wall Street. Futures tied to the Dow Jones Industrial Average lost 27 points or 0.08%. S&P 500 futures and NASDAQ 100 futures hovered around the flat line as well. JetBlue Airways, whatever. I don't really care about JetBlue. Listen, y'all, I'm going to be frank. I don't own any JetBlue or American or Spirit or any airline. But apparently they are going to end its partnership. JetBlue, that is going to end its partnership with American Airlines in the Northeast. And they're going to focus on Spirit Airlines, which is who they've been trying to do like a takeover or like a merger with. I'm not, again, like, I fly Southwest, so this makes no impact to me. Shout out Southwest. Continuing on, the shortened trading week resumed Wednesday after a break for the 4th of July holiday. The major indexes logged modest losses. The Dow Jones Industrial Average lost 129.83 points, or 0.38%, while the S&P 500 dipped 0.2%, and both indexes snapped three-day win streaks. The NASDAQ composite finished 0.18% lower. Part of this movement was what was said in the Federal Reserve meeting minutes. Now, this was for June's meeting. They published them in July, but lo and behold, this is what they were talking about in June. They were effectively saying that they were going to leave the target rate or range unchanged at the meeting, and it would allow them to have more time to assess the economy's progress towards the committee's goals of maximum employment and price stability. So this is like everything that they said here was basically everything they've been gesturing towards for the last year. Like, they've basically just been saying, like, yeah, we got it. We've slowed it down, but we're definitely going to take a wait and see approach and not hike rates, which is fine. They did mention that the median consensus among the Federal Open Market Committee, who are the people that actually raise and lower and set interest rates, from a median standpoint, they're all generally saying that there's going to be two more rate hikes, both 25 basis points each. So expect that, but nothing has, like, everything that they've said in this meeting, they've been saying for the last quarter, it feels like. And that's okay. Like, it's good that they're being consistent. It's good that they're letting this long-term play out. I think that's good. I like what they've been doing with interest rates. I think keeping them here could probably be okay. I know everyone wants to do the long-term quantitative easing and then drop them back down to 0% at some point. I think having a 4%, 3 to 4% interest rate, that's like healthy. I think. I mean, to be fair, like that's healthy. I'm a Zoomer. I'm Gen Z. So for me, like, most of my life, it was a mega low interest rate environment. Like, if we pull up like the federal borrowing rate, federal funds effective rate, that's good. We take that. Basically, since I was born. Yeah, so I was born in June of 2002, so it was at like 1.75%. Then they bumped it to like 5%, which is where we were at just before the 2008 financial crisis. And then they brought it back down, so and then they basically dropped those things to 0, and then they rose them by like 2 points, like 2.5 points, and then they brought them back down to 0 again, and then obviously the higher interest rate environment that we're in now. That being said, I think holding them at 3 to 4% would probably be good. I think that's like a healthy interest rate. Obviously, like, so motherfucking real. Hey, Jude! Thank you, man. What's up? But yeah, like we don't need to swing, baby. We don't need to have quantitative easing and quantitative tightening. If you just keep that shit like quantitatively chill, quantitatively chill at like 3 to 4%, I think like, yeah, the economy doesn't have boom or bust cycles, but it's more like well-rounded and healthy, and it doesn't overheat and then like cool down, you know? It just kind of stays constant. I mean, there's still probably going to be like minor boom and bust cycles, of course, but generally speaking, like it would have more equilibrium if it was like this at 3 to 4% than them raising it to like, you know, 5% and then dropping it to 0% and then raising it to 4% and then dropping it to 0%. Like, come on. Just keep it at like 2 to 3%. And like that's also about in line with inflation. Obviously, like inflation is not good. Inflation is not good. But I think them trying to bring inflation back down to 2% is probably going to be healthy for the economy. It's a lot healthier than 9%, which is where we were at like last year. Right about this time, actually. Hey, time flies. But yeah, I don't know. I think it's good that the Fed is staying consistent with their policy. That's good. They're not backing down and buying into these pump fakes kind of deal. They're just sitting on their hands and waiting, because this is what they did to time flies when you're having fun, just fucking working, just like working like 40 hours a week, 52 weeks a year, fucking constantly being under fight or flight if like you're gonna make rent. That's fun, baby. That's the American dream, baby. It's the day after 4th of July. Come on, man. That's fun to me. That's fun to me. It's the game, baby. But no, I think consistency from the Federal Reserve is good, and I like what they've done so far to this point. Let's continue on. The United States is planning to curb Chinese competition by limiting their access to Amazon and Microsoft cloud services. I love the game. Shout out to capitalism, bro. Shout out to capitalism, not corporatism. That's the bad part. Corporatism's the bad part. Corporatism sucks. Capitalism, me gusta. The United States is preparing to curtail Chinese companies' access to cloud computing services, including Amazon and Microsoft's cloud computing platforms. Washington is considering requiring cloud providers to seek government permission before serving Chinese firms that employ such platforms to train AI models. Microsoft Azure and Amazon Web Services are the global leaders in the business of providing internet computing to enterprises and compete in China with the likes of Alibaba through local state-affiliated data center partners. This is overall a part of a wider push by the Biden administration, and I'm going to be abundantly clear. I do not like Joe Biden. I think Joe Biden is an objectively bad president. What he's been doing for our infrastructure has been very, very interesting. And there are some things that are praisable and some things that are not as praisable. One of the big, and when I talk about infrastructure, let me make this abundantly clear. We're not talking about like the infrastructure bill, the fucking bipartisan like $1 trillion infrastructure bill. Not this one. I'm not talking about this one. I'm not talking about this kind of infrastructure. I'm talking about the CHIPS Act, when the infrastructure is like making investment into semiconductors being made in the United States, like building out the manufacturing base of the United States, that infrastructure. And like Donald Trump, he talked about it. He did bring some jobs back, but there were no real like infrastructure investments like in the Biden administration. And I think that this kind of stuff is good. Frankly. And I think that we are probably going to see more of this stuff. And I know that this is divisive because it's oil, but the Willow Project, which is also what the Biden administration did, they passed the Willow Project for ConocoPhillips, and this is something way back in March. I'm just pulling it up now. It is the largest oil expansion on federal land in United States history. Over 600 million barrels of crude will be produced in 30 years, and it will be an $8 billion endeavor in the National Petroleum Reserve. And it's interesting that we're seeing this type of like them tapping into the petroleum reserve. Let's go nuclear. I'm cool with nuclear, bro. I'm cool with fucking nuclear energy shit. Like bro, thorium, bro. Okay, check this. I did an entire speech and debate thing. If Stream wants me to find it, I'll pull it up. Where is it? I know I had a bunch of speech and debate stuff. Yeah, it was in here. Debate. LD. Yes! The nuclear power debate. Thorium, dude. Is this the one? The AF. Holy shit, dude. I haven't busted this out in minutes. Thorium. Yeah, dude. I was pulling up shit about thorium. Where is it? Yeah, bro. Thorium. Thorium is the way to go. Thorium is the way to go. Nuclear reactor efficiency. Like, I'm all about this type of investment. So, 1 ton of thorium can produce as much energy as 200 tons of uranium. And if y'all want to get crazy for all of my non-renewable resources enjoyers in chat, my non-renewable fans, members of the millions, 1 ton of thorium can produce as much energy as 3.5 million tons of coal. So yeah, and it's more abundant than uranium. It's more abundant than uranium, so it's cheaper. We have everyone has a shit ton, but guess what? Do you know why we can't have this kind of stuff? Check this out. Dude, uranium lobbyism, bro. Like, these people are fucking, like, dude, people be fucking spending a shit ton of money on making sure, like, people are paid off for uranium and then pumping it out. And I still think that uranium is still probably better than, like, the use of petroleum to power things. And coal, definitely. I definitely think uranium is better than coal. But thorium is significantly better than everything. And we can actually make, like, cleaner, cheap energy that's not as radioactive, less impact on the environment. But hey, let's not do that. Let's just do petroleum. Let's just keep using that. But I think that thorium's the future. I truly believe thorium's the future. But no, it's the type of infrastructure investment, to go back to the Biden administration stuff. This type of infrastructure investment is very, very important, and I think it's very, very good. But it's also very, very interesting, because in instances like this, I find, like, I start looking at it like I do tariffs, and then the view starts to break down. It's like, yeah, good. It's like national sovereignty. Let's go. Big ups to the United States. But then you start thinking, like, are they limiting the free market? And there's a lot of people in chat who they are, like, total free market libertarian, like, oh, big ups to you. Big ups to Bo Smallman, who's in chat right now. Same thing with Jude TV42. Much love. But when people start talking about free market and limitations to it, this is one of those things. Like, how do you guys feel about the idea that the government can come in and basically block the ability for China to access our services? And with that, how do you guys feel about tariffs overall? Like, should we be able to put tariffs on China? And should China be able to put tariffs on us? Do you think that tariffs are an interesting way for, like, we're in a Cold War with China right now. Like, we are in an active Cold War. We've been in a Cold War for 20 years with China. Do you think that China, it's okay that China does this and we do this to China? Because I like the idea of like national sovereignty, but the other thing too is like China's not letting us. I think it applies equally. Definitely, yeah. The burden is definitely on both states doing this, on both government entities doing this for sure. I do think like if China's doing it to us, like they're not letting any of our tech companies use their internal data centers and stuff like that. Why should we let them use ours? I mean, like, obviously, it should be the company's choice to make, but there's, like, a certain degree of national security. Like, I do think that tariffs on China are good. Like, if you want to promote Made in America, build out the manufacturing base, and then put tariffs onto China, and then promote domestic growth. Like, that shit works. That shit works. It does work. But no, I generally think the Biden administration, I can support this more than I don't support it. How about I say that? I don't entirely support it, but I support it more than I don't support it. Speaking of Asian countries, Japan has launched its Prime 150 stock benchmark to help investors identify value. The Prime 150 index for Japan and the Tokyo Stock Exchange more specifically are of similar quality to S&P 500 constituents. It's effectively a market cap weighted index. And it's made up of like Sony, Hitachi, Nintendo, but not Toyota or Nissan. Quite interessante. But it's value based, so they are all about they're all like basically the larger companies are going to trickle to the top. So if you take a look at like how the S&P 500 works, pyramid, weighting pyramid. Someone should make this if they haven't already made it. Show me this pyramid. Give me that. Give me that. What the shit? Okay, hello? Are they gonna... Well, okay, this is basically it. So, what this is showing is the S&P 500 is market cap weighted, meaning that larger... you hold more of the larger companies than of the smaller companies. It's almost like an inverse pyramid. Actually, you know what? Let's pull this sumbitch up on Paint. How about that? How about that? How about that? How about that? We pull that sumbitch up on Paint, and we do it like this. Does chat know if Daddy can do a background? Oh, I can. Let's go. That's fucking big. Okay. So the S&P 500 basically works. Can I get a fucking can I get white? Hello? Please? Is this not going to let me do white? Come on, fucker. What's going on here? Please, dude. Okay, can I just do this then? Oh, okay, that works. This works. Okay, S&P 500. It's like a triangle. So the larger companies make up like Apple and Google and all them. Like they all make up like the large like they make up a bunch of it. So like larger companies have more weight actually. Let's like go back a little bit. It's more like this. Oh shit. There we go. It's more like this. So this is like a better representation of it, but the S&P 500 is primarily like the larger companies on top and then the smaller companies on the bottom. So you own more of the larger companies, and this is going to basically be how the Prime 150 works. So this is going to be how this new stock index for Japan is going to work. So larger companies are going to be held higher than smaller companies. And I mean, Japan is interesting because they're a stagnating economy, but there's been a lot of foreign investment. Like Warren Buffett has dropped a fucking bag on Japan. How much has Warren Buffett invested in this point into Japan? He bought like $8 billion. He bought a shit ton. Gross domestic product. True. But he bought, yeah, he's dropped like a fat bag on Japan. And it's interesting seeing investors pour back into the Japanese economy. I don't own any Japanese companies or anything like that. Also, holy shit, 4 million people. I guess we're back to 3 million. I guess we're now back to 2 million. Look at that. Steep viewer drop off. I don't own any Japanese companies myself, but I know there are a lot of investors that do like it. Hey, what are you going to do? Jude's real as fuck. Jude's real. Jude ain't riding no wave. He's been here since day one. Much love. But yeah, I'm interested to see. You know, love you, baby. Love you, baby. But here are assets that I do hold that I'm about to talk about. Bitcoin. Look, oh my God, Bitcoin. I do hold Bitcoin. I dollar cost average into Bitcoin. I don't give any financial advice out. I'm not saying anyone should buy Bitcoin, but I do, and I purchase a little bit every single week. Bitcoin over the last month has, specifically the last few weeks, has had some interesting price action. I guess we can move on to, I guess let's do TradingView. Also, shout out to Damien for telling me about the TradingView web app. This thing has changed my life. This is like the greatest thing on planet Earth. But if you look at Bitcoin from like it has turned macro bullish for the first time in the last time it broke above this support zone or this resistance zone was like here. Okay, if we go back, it was like 2020. Yeah, dude, Bitcoin macro is like crazy right now. Oh, I guess Damien may have been talking about the TradingView stuff, but Bitcoin macro is good. I don't think we have seen the end of Bitcoin. I don't think 2021 was the end of Bitcoin and cryptocurrencies. And I choose to purchase some every single week. Obviously, this is just some kid talking about trading on the internet. This is basically the male version of having a horoscope. So again, these charts are it's just something that I think is fun in my off time. But I do think it's interesting. Historically speaking, Bitcoin is looking a touch good right now. S&P 500, we'll see. Seems a little oversold in terms of momentum. Dow Jones, who knows? But here's the thing. No one ever knows. I'm just saying that this looks good based off of like arbitrary information that I have deemed important. But again, it's just male horoscope stuff. But Bitcoin has broken above the it's hit the Ichimoku cloud. Now, I'm a Virgo, no bitch, I'm a Bitcoin holder. Big. That's fucking real. That's fucking real, dude. It has hit the Ichimoku cloud. So every time it's gone through a cloud, like this is basically like support and resistance zones kind of deal. And whenever it goes through the Ichimoku cloud, either on the way up or on the way down, it's like really tumultuous. But if it breaks out of it, then it goes crazy. Like look at like 2020, right? So it's like super tumultuous up in here. You know, it's going through the Ichimoku cloud. It's this shit crazy. Panic dump, COVID, bada boom. And then it goes back to being kind of turbulent. But then once it broke out, dude. And then you zoom out, right? So it's making its way. I think Bitcoin may have some turbulent times within the next few months. But I think long term, Bitcoin is one of my favorite investments. I'm not going to say it's the best investment. I'm not going to say people should invest into it, but it is one of my favorite investments. What was my premium on the Alibaba call? Yeah, let's take a look at those actually. Why not? Let's break it down on stream, fuckers. I guess I'll move that over. Or let me pull up my Alibaba, my Robinhood stuff on the Alibaba call. Give me 1 second here. Logging into Robinhood. Okay. I'm in. So I'm up 11% on those things. I bought it at 45 cents. And now I think it's trading at like 50. So it was solid. Yeah, like I'm up like 11% today on that. So I'll take that. If you were looking for premium, I'd be happy to take a further look at it, but I don't know if that's what you were looking for. Keep it open until Friday. Okay. I'll keep it open. I do also have that Walgreens one The Walgreens Boot Alliance. I bought that one at like 18 cents. It's trading at like 15 if they round up. But I'm not super stressing on this. I think this is one I'll keep open when until you close it. Yeah, I'm down on that one. That was Jake's call. Hey, what are you gonna do, man? You win some, you lose some. But I mean, I think like I think it may work out. I'm trading. I'm like playing around with like $150. I'm hella down on Pokemon cards. How much money do people spend on Pokemon cards? Because I know people spend like $200 on fucking booster packs and shit. And that shit's just crazy. Anyway, Bitcoin looks great. That was that segment. Billionaires gained $852 billion collectively this year. Just absolutely absurd. Within the first 6 months of 2023, the 500 wealthiest people in America got $852 billion richer. All the while, if we look at the personal saving amounts, like personal saving balances that Americans have, that they've had allocated, it peaked in COVID because of all that fun stimulus, but it peaked at basically $4.85 trillion. And updated on June 29th in the first quarter of 2023. After you're done, join call. Let's talk about Leaps. Oh, dude, shout out to Leaps. I'll talk for a little bit because I have to go meet someone for dinner. But I am a big Leaps fan. I'm a Leap head, if you ask me. The average, in terms of like everyone in America, the savings amount that people have has fallen below $1 trillion. And this is basically like where it was in like 2014. But it's interesting because it's fallen like 81% or 82% since the COVID peak. All the while, billionaires be getting richer. But hey, ain't that always the game? I think that's where we're going to call it on this week's Midweek Market Recap. Thank you, everyone who tuned in. It's always a pleasure. I always love doing these. And I guess now we can get into our little subtle plug section. So twitch.tv/Dylan Holy. I have 29 followers now, guys. We're moving up. I have 29 followers, dude. Road to Partner is in the works. We're going to make it happen. Speaking of which, on another platform, youtube.com/@DylanHoly. I have 18 subscribers on there, dude. This is fucking sweet. Like, y'all are tuning in. I much appreciated, y'all. But go ahead and give me a subscribe over there. Sometimes I post shorts up. I wish that YouTube Shorts would go to like 3 minutes instead of 1 minute. I mean, I guess that adds to it. Like, it has to be under 60 seconds. But like, dude, 3 minutes for fucking key takeaways, please. Please, I'll never go longer than 2 minutes, please. Anyway, do you know where I can upload full-length key takeaways with no problem? That's Twitter, over at twitter.com/RealDylanHoly. I'm giving y'all breaking news whenever it's live. You're the first ones to find out whenever I go live with the Dylan Holy Experience, and I post key takeaways every single market day. The market is open. The Dylan Holy Experience is open, and we just have fun. We just bullshit on Twitter. Post some pictures. Sometimes I live tweet WWE events. I just have a fun time. But there we go. Midweek Market Recap. Thank you all so much for watching, and I'll see you soon.